In a shocking turn of events, Vanke, one of China's leading real estate developers, is now facing potential financial turmoil. On March 11th, renowned international rating agency Moody's downgraded Vanke's rating to Ba1, categorizing it as junk status. This downgrade effectively cuts off Vanke's access to international bond markets for financing. The news has sent shockwaves through the industry, with rumors swirling that numerous creditors and insurers have flocked to Shenzhen to demand repayment from Vanke. Could this spell the downfall of even the top-performing domestic real estate giant? A major event is unfolding, as Vanke, once regarded as a model student in the real estate industry, finds itself in dire straits. Despite not indulging in the aggressive diversification seen in Evergrande or maintaining high leverage and debt turnover like Country Garden, Vanke still finds itself in this precarious situation. The question on everyone's mind is, how did Vanke, with its cautious approach, also end up in this position? On the evening of March 11th, Moody's, one of the world's three major credit rating agencies, downgraded the credit rating of China's iconic real estate company, Vanke, from investment grade to Ba1, known as junk bond status. The other two credit rating agencies, Standard & Poor's and Fitch Ratings, are still observing and have not yet downgraded Vanke. In China's real estate sector, there are three major giants: Evergrande, Country Garden, and Vanke. Vanke, with its official state-owned background, has been considered the most trustworthy real estate enterprise and financial role model in China. Therefore, even though Evergrande and Country Garden have been experiencing severe financial difficulties since 2021, Chinese citizens continue to have confidence in Vanke. But in recent months, news has emerged about Vanke's failed negotiations with multiple creditors for debt extensions. There have been numerous insiders revealing that Vanke's financial situation is not favorable, plunging it into a debt crisis. Now, with Moody's directly assigning Vanke a junk credit rating, it's akin to declaring that the outlook for China's real estate market is not just bleak, but potentially even worse. This real estate agent is also feeling the strain. If Bank goes bankrupt, I'll head straight back home to farm, without a second thought. Who could buy houses when even state-owned enterprises can't withstand the pressure? Can the real estate market be saved? Founded in 1984 in Shenzhen, China, Vanke was the first real estate company to be listed on the Chinese stock market. Its business encompasses residential development, property management, commercial real estate, logistics, and warehousing. Its largest shareholder, Shenzhen Metro Group, is a state-owned enterprise directly managed by the Shenzhen State-Owned Asset Supervision and Administration Commission, making it a major player with substantial government backing. Unlike the privately owned enterprises Evergrande and Country Garden, Vanke's corporate structure has inherent differences. With its state-owned background and historically strong financial performance, Vanke has been regarded as the top-tier player and the last stronghold in the Chinese real estate sector. Although there were rumors of a debt crisis in October 2023, its major shareholder, Shenzhen Metro, swiftly intervened with support from the Shenzhen State-Owned Asset Supervision and Administration Commission. This facilitated early debt repayment and averted a crisis. But recent developments suggest that Vanke's debt issues have not been fully resolved since October last year. In fact, all signs point to Vanke facing severe financial challenges. Its contracted sales dropped by 10% in 2023 and further plummeted by 32% in January 2024. Since the end of last year, many investors have been offloading Vanke stocks, resulting in a 9% decline in its stock price in 2024. Moody's senior vice president, Kevin Tsang, stated that Moody's predicts a gradual erosion of Vanke's financial flexibility and liquidity cushion over the next year to a year and a half. Existing data indicates Vanke's vulnerability to funding instability and high financing needs. Due to the uncertain state of the Chinese real estate and financial environment, Vanke's sales, financing channels, and cash liquidity are bound to be affected. Moody's assessment suggests that Vanke's refinancing capability will be further constrained. Moody's even adds that there is a possibility of further downgrades to Vanke's rating in the future. According to the renowned financial magazine Bloomberg, Vanke's total debt currently stands at 1.28 trillion Chinese yuan, approximately 178 billion US dollars. Also, there is a significant portion of debt maturing this year, including 600 million US dollars worth of notes due in June. Bloomberg columnist Xu Liren analyzes that Vanke's biggest obstacle at present is the lack of clarity regarding future sales. Like other real estate enterprises, Vanke heavily relies on pre-sales of properties. Until last September, Vanke's contracted liabilities amounted to around 408 billion yuan, approximately 56.6 billion US dollars, with the majority being deposits prepaid by consumers for unfinished properties. From this perspective, Vanke's cash position may not be as robust as it appears. The collapse of Vanke fully illustrates a universal truth. Even the top real estate giants can fall into the trap of financial downfall. When it's time for a meltdown, nobody can escape. Vanke is currently facing three major challenges: excessive debt, pressure from insurers for debt repayment, and a decline in sales. China's real estate market has been sluggish for 3 consecutive years, and even the top performers cannot evade this test. In February, Vanke's contracted sales plummeted by 53% year-on-year to 14 billion yuan, 1.9 billion US dollars. Marking the largest monthly decline since 2018. Compared to the previous month, February's contracted sales dropped by 28%. According to the latest data, Vanke's operating profit margin has declined from its peak of 29% in 2019 to 8.4% in the quarter ending September last year. Furthermore, Vanke's operating profit for the first 9 months of last year was only 31 billion yuan, about 400 million US dollars, a 23% decrease compared to the same period in previous years. It is widely anticipated that the overall housing market will worsen this year, making the lack of sales visibility Vanke's biggest obstacle. Bloomberg columnist Xu Liren noted that despite cautious management at the top, Vanke performed relatively well last year in an extremely unfavorable environment. But this year, the outlook for the real estate market is uncertain, if not downright pessimistic. According to a recent survey, less than 20% of Chinese people plan to purchase a home in the next 6 months. So far, the Chinese government has remained passive, allowing major developers like Evergrande and Country Garden to default. Xu Liren warned that if China continues to let Vanke default, the country's economy will be plunged into the abyss this year. The impact of Moody's downgrade on Vanke. Vanke, a prominent player in the Chinese real estate market, has long been regarded as one of the least likely companies to default. At the end of last year, Shenzhen State-Owned Asset Supervision and Administration Commission expressed confidence in Vanke's financial stability, stating that they would actively support the company in extreme situations. During the recent annual legislative sessions, China's Minister of Housing and Urban-Rural Development, Ni Hong, stated on March 9th that the state would not bail out real estate companies facing severe insolvency or loss of operational capacity. Instead, the responsibility would be handed over to local governments, urging them to adhere to market principles and allow for necessary bankruptcies and restructurings. Ni Hong's stark remarks have sent shockwaves through China's creditor community. This is because Vanke has been rumored to be in a financial crisis multiple times. Just days before Ni Hong's statement, it was reported that in early March, the China Banking and Insurance Regulatory Commission instructed banks to secure financing for Vanke. Several insurance companies, including New China Asset, China Pacific Insurance Company, and China Taiping Insurance, were required to extend the repayment period for Vanke's private placement bonds to ensure repayment of public bonds. Moreover, rumors have circulated in the industry that Vanke's chairman, Yu Liang, along with the management team, went to Beijing to negotiate with lenders, primarily insurance companies, for the extension of non-standard debts. This reportedly included a 10 billion yuan investment from New China Asset, but it said that Vanke's request was ultimately denied. When these reports emerged, despite New China Asset's quick denial on March 3rd, Vanke's stock prices plunged the next day. On March 4th, A shares fell by nearly 5%, while Hong Kong-listed Vanke dropped by over 7%. Similarly, Vanke's domestic bonds experienced declines, with the 22 Vanke 06 bond failing by as much as 36%, triggering a temporary trading halt. Given the intense market reaction, Nihong's statement appears to be akin to lighting the fuse of Vanke's potential explosion. Renowned YouTuber Financial Observer analyzed and said, with Vanke's debt extension being denied, strictly speaking, it's just one step away from debt default. Many investors have chosen to be bearish on Vanke, and some have even shorted Vanke. Financial Observer states that the risks in the real estate sector are bound to spread to state-owned enterprises. From poor sales to discounted property sales through debt extensions, it often ends with a default. This seems to be the pattern, and Vanke is unlikely to be an exception this time. Furthermore, after Vanke encountered a debt crisis, the Shenzhen State-Owned Asset Supervision and Administration Commission failed to fulfill its promise to support Vanke. 5 or 6 banks, including Industrial Bank and Ping An Bank, have begun to withdraw credit lines from Vanke, which can be considered as cutting off its last lifeline. Bloomberg shares a similarly pessimistic view. The article suggests that if China allows well-regarded builder Vanke to continue to default, it will break China's back. Financial Observer suggested that if Vanke collapses, the impact on market confidence may be far greater than that of Evergrande and Country Garden. If developers rooted in state ownership cannot be rescued, it essentially indicates the downfall of the entire real estate sector in China. The bankruptcy of Vanke would have a severe impact on the Chinese economy. Even the Beijing authorities are unwilling to gamble with this risk. Just a few days after the annual legislative sessions, it was reported that the Chinese Communist Party instructed the Industrial and Commercial Bank of China, ICBC, to lead a consortium of 11 banks to raise a 80 billion yuan, around $11 billion loan for Vanke to help it through its financial difficulties. According to the Epoch Times, insiders revealed that the banking consortium is not enthusiastic about providing financial assistance to Vanke. Chinese expert Wang He commented, if Vanke had very valuable assets, banks would be eager to lend it money. But Vanke is such a pit, economically speaking, that no one wants to fill it unless pressured by the CCP. Unless there is political pressure, no one will jump in. If it has to be enforced, it's simple. Who will take responsibility? Who will give the political pressure? Who will give the political orders? Who will sign and take responsibility? Currently, no one is willing to step up to take this political responsibility. They just convey the policies from above, and now everyone is thinking of lying flat. Looking back at the Evergrande Group, another of China's big three, the company once ranked 152nd in the Fortune Global 500. After its funding chain broke in September 2021, it plunged into a debt crisis. Finally, on January 29, 2024, Evergrande was ordered to liquidate by the Hong Kong High Court, a fate drastically different from Vanke's. Why didn't the authorities directly ask the banking sector to rescue Evergrande and Country Garden when they collapsed? According to Wang He, it's because of Vanke's state ownership background. Unlike private enterprises Country Garden and Evergrande, Vanke represents the state and the CCP cannot easily let it collapse. This also reflects the different treatment of private and state-owned enterprises by the authorities, representing the varying reality for different enterprises in China. Professor Frank Xie from the School of Business at the University of South Carolina Icahn told Radio Free Asia, "The CCP cannot let Vanke collapse because it treats insiders and outsiders differently. If state-owned assets and the State-Owned Asset Supervision and Administration Commission collapse, it means national capital bankruptcy. It questions the ability of the Chinese Communist Party to operate enterprises. It involves the image of the entire Chinese nation, posing too great a problem. The CCP wants to preserve its own face. As for other private enterprises facing problems similar to Evergrande, the CCP cannot and does not want to rescue them. Of course, Vanke can repay its debt because this is the last fig leaf. If even this is torn apart, what will be the outcome? Lately, everyone online is clamoring to save Vanke, but I have a question. Why should we save them? Why doesn't Vanke save itself? Doesn't it have the capability? Look at their financial reports. They own a lot of properties. If necessary, they can sell them at a discount, maybe even have price for less, and provide affordable housing to the people. Over the years, Vanke's brand reputation has been unparalleled in the market, and people will surely buy. If Vanke sells discounted properties now, people will definitely buy. Once the money comes back, the problem is solved. Taiwanese macroeconomist Henry Wu proposes another perspective, suggesting that the Chinese authorities' decision not to bail out Evergrande and Country Garden might be a preparatory move for future debt negotiations and restructuring among other real estate firms. In other words, they are targeting Evergrande and Country Garden first. Wu explains that, for example, if Evergrande owes $10 and only returns $1, is it possible to call it debt restructuring? If not, returning $2 might be the final offer to stop further disputes. Wu also interprets the statement by China's Ministry of Housing and Urban-Rural Development Minister Ni Hong during the two sessions, otherwise known as the National People's Congress and the Chinese People's Political Consultative Conference, saying, quote, "Let those who should go bankrupt, go bankrupt." He believes this message is not directed at Vanke, but rather at the creditors of real estate companies, to create psychological pressure and make them worry about the situation worsening. According to Wu, if there is still a possibility of official intervention, creditors won't compromise and will continue to make demands. For Beijing, dealing with creditors is the first step in addressing debt issues. A review of China's current top 10 debt-laden enterprises reveals that 8 are in the real estate sector. The predicament of Vanke, a leading player in real estate, underscores that China's property market crisis is far from over, with a significant risk of evolving into a financial crisis. According to Nikkei, as of the end of June 2023, the total assets of 11 major real estate companies in China were approximately 12.3 trillion yuan, while total liabilities were around 10.3 trillion yuan. The difference of about 2 trillion yuan constitutes their capital. Nikkei warns that if the value of these unfinished properties drops by 33%, it would directly lead to insolvency. Wow, construction workers are in for a treat again. In the first half of 2023, the top 10 listed real estate companies' debt rankings are out, and construction companies are really swimming in wealth. The first is China Evergrande with debts of about 2.4 trillion. The second is Country Garden with debts of about 1.5 trillion, and the third is Vanke with debts of about 1.35 trillion. You think it's real estate owing money, huh? Actually, it's you. The industry chain, from upstream to downstream, will reflect all of this back to you. Sweating profusely, huh? Tough life in construction, huh? The CCP calling on banks to rescue Evergrande may have led to the misconception that the government would intervene, reducing anxiety for many. While stabilizing the property market is a priority for the authorities, the real issue in the Chinese real estate sector lies in the excessively inflated property market. Addressing the surplus housing stock will be a lengthy process. The current situation of prolonged stagnation in the real estate market significantly impacts economic development. Therefore, it can be anticipated that the Chinese real estate crisis will continue to escalate.